You got me running, got me running. Shake it, shake it, shake it, baby. Raise your hands up. Raise them up.
Hey, good morning, everybody. Welcome to the Forex Trading Asia Daily Currency Call, episode 323. It's 11 a.m. right here in Singapore, 30th of June, GMT plus 8. All right, so first off, if it's your first time here, warm welcome. We do this currency call every Monday to Friday, and the currency we analyze every day is as follows. So on Monday, we do the Aussie and Kiwi, Tuesday, Euro, Wednesday, Pound, Thursday, Yen and Gold, Friday, Canadian Dollar, and currencies. So do join us every day if you do not want to miss out on the other currency pairs. Okay, so in this currency call, you will get market economic updates, key support resistance levels, trade ideas, and more. This currency call is going to be very beneficial to both the long-term investors and also the short-term traders. Here we will be going through what could move prices, possible trade ideas, and also highlighting potential targets and risk. So disclaimer here, any information shared during this session is not intended to be a trade recommendation. It is solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so as discussed yesterday in our Euro currency analysis, today's more notable news to look out for would be the Euro CPI release. So to look out for that and to watch yesterday's currency call if you want to know our views about it that we did yesterday. So tomorrow, Thursday, 1st of July to be exact, if you look at the economic calendar, you will see that there is this OPEC meetings happening throughout the day. So what is this about? What currency will it affect? Is there a need to prepare for it? Do let me invite Kim Hong, currency analyst at LCMS Traders, to share about this. Kim Hong.
Yes, there is a need to prepare for it, that's for sure, okay? Okay, I was told that there are many new members joining us in the currency call. Welcome. Okay, sorry, my throat is not very good today. Okay, from time to time, you'll see me join the into this call. Okay, so what I'll be doing is I'll provide you guys with like any fundamentals that happenings around the world, you know, updates on fundamentals, or maybe upcoming fundamentals like the OPEC meeting tomorrow. Okay, now, okay, let me go on to what's going to happen tomorrow. Okay, before that, I would just like to do a bit of a recap of what took place during the previous OPEC Plus meeting, okay, which was in 1st of June. Yeah, 1st of June. Okay, so previously, the OPEC Plus, okay, they agreed to continue easing oil production cuts by 2.1 million barrels for July, for the month of July. What this means is that they will be increasing oil supply, okay, oil production by 2.1 million barrels per day, okay, and that was actually a planned, I would say, a planned quota since I think April. So they actually decided to do a 3 months hike of oil production by 2.1 million barrels, okay, from I think May, June, and July, okay, and oil prices actually went up to more than a high level of more than 2 years, okay? This was mainly due to, sorry, I think I just got muted. Okay, don't worry, the show is not ending yet. Junwei, don't mute me. Okay, so yeah, so as I was saying, oil prices actually went to more than 2 years high, okay? Well, why is that the case? Because a couple of key players, I wouldn't say key players, I would say like a couple of key personnel, okay, from the industry, the oil industry, actually made very optimistic views on the current oil market, okay? Saudi Energy Minister, okay, Prince Abdulaziz bin Salman, okay, he mentioned that, I quote, "Since we reached our agreement in April 2021 to return supplies in a gradual and responsible manner, the demand picture has shown clear signs of improvement." Okay, then during an interview, you know, the International Energy Agency Executive Director, okay, Fatih Birol, okay, he actually said that he expects strong recovery of oil demand in the US, China, Europe, and elsewhere. Okay, so this is very coming from the key personnel. Okay, these remarks are actually very optimistic. Okay, for the oil prices. Okay, so which is why we see like there's an increase in crude oil, in ICE Brent prices and things like that. Okay, now, so tomorrow is the OPEC meeting. Should we be expecting something from them? Yes, otherwise I wouldn't be here. Okay, so what to expect from them? My view is that they will likely increase oil production quota for August. Okay, what this means is that, like I mentioned previously, July they will be increasing oil quota by, let me get a figure again, 2.1 million barrels per day. Okay, chances are in August they are going to increase this figure by how much? I'm not sure. Okay, but why is it that they will be increasing? Okay, 3 reasons. First reason, the latest OPEC forecast actually shows that if the OPEC Plus were to maintain oil outputs at the current levels, okay, of 2.1 million barrels per day, okay, this will actually lead to a supply deficit of 1.5 million barrels per day in August. Okay, so what this means in short is that the supply will not be able to meet the demand. Okay, coming from the the global demands of oil, coming from different countries. Okay, that's the first point. Second point, with the demand recovering, okay, it is definitely to the best interest of the members, okay, of the OPEC Plus to hike production. I mean, why is that the case? Because as I said, if demand, okay, if the supply is not meeting demand, then why not meet the demand, right? Meet the demand, and business will be good for the members of the OPEC in terms of their revenue. So it is actually to the best interest of the individual OPEC members to do a hike in the oil production. Okay, and the third reason is inflation. Okay, why is that the case? Now, I'm not sure if you guys actually realize, but previously during my calls, I actually share like talks on inflation's hike around the world, the kind of things in different countries. And if you have been following the market, inflation has been an issue in many countries. Okay, in UK, in especially US. Okay, which leads to many major speculations by the market of whether the central banks around the world will be will be tapering quantitative easing, and eventually lead to interest rate hikes. So if you actually look into the individual inflation reports of those countries, you will realize that oil prices is one of the major driver, okay, of the spike in recent inflation. Okay, so this is actually not very nice for the individual countries. Okay, oil prices increasing is maybe imagine like petrol, gas, oil, cooking oil, increase in all these prices is actually a burden to the consumers, right? So the OPEC Plus is actually receiving pressure from many countries to hike production. Now, hiking production of oil will actually lead to a decrease in the prices. Okay, why is that the case? Econs 101, when the supply increase, to meet the demand, prices will fall. Okay, so as we know that right now the OPEC Plus, based on their forecast, they are running a supply deficit. Okay, that actually partially contributes to the rise in the recent oil prices. Okay, so these are the 3 main reasons why I think that the OPEC Plus will be increasing oil production quota for August. Okay, now what about beyond August, you might ask? Usually, usually they will try to, the OPEC Plus will try to set a quota for the upcoming months, okay, but not this time round. Okay, not this time round, meaning they are likely just going to announce the quota for August. Anything beyond that, they're just going to come back in August and talk about it. What's the quota going to be like for September? Okay, now why is that the case? 2 reasons. Okay, first reason, Delta variant. What's that? The COVID Delta variant, new variant that I'm not sure where it originates from, okay, has hit Europe, okay, and it has not only has it hit Europe, it actually hits like, globally, many different countries of the world, okay? Like Southeast Asia, okay? And recently, Indonesia, Malaysia, and Thailand has, resumed lockdown and, the lockdown restrictions, okay, has resumption of lockdown restrictions. UK has extended lockdown to July 19, okay? And recently we just heard that parts of Australia has tightened restrictions, okay, due to the Delta virus outbreaks, okay? I think it was just yesterday that, they say that they're going to tighten it further to, just to, in an attempt, an effort to actually, to contain the virus, okay? So with this whole virus, this whole Delta variant issue going around the world, hopefully that's not the case, but we may be seeing more lockdowns coming up, okay? So with more lockdowns, what this means is that, people don't get to travel, people don't get to, you have to stay at home due to whatever notice that's been issued out by the government, you won't be driving around more often, which will, all these, okay, around the world, will actually lead to a decrease in demand of oil, okay? Now, this can actually complicate things for the OPEC Plus, okay, in terms of their forecasts and their what quota to set for oil production in the future, which is why they will want to take things slow for now. And, let's just evaluate things on a monthly basis, okay? This month we'll evaluate, what quota should we hit for next month and so on and so forth for the subsequent months, okay? So that's the first reason, Delta variant. Second reason, I'm not sure how many of you actually follow this whole political issue, but it's actually the Iranian nuclear talks. Okay, I'm not going to go into the whole, this whole story behind this. So basically, at the moment, okay, Iran and the US is in the discussion, okay, for reviving the 2015 nuclear deal, okay, and the lifting of Iran's sanction. Okay, so and as some of you may know that Iran has actually recently just elected a new president, okay? And the president actually, from what I know, he's actually quite interested in, reducing this tension, making peace with the US, okay? So there may actually be some upcoming news progress in terms of the 2015 nuclear deal, okay? So how will this actually impact the oil prices, okay? So as we know, Iran is actually one of the oil producing countries in the world, okay? At the moment, it is actually producing 2.4 million barrels per day of oil, okay? But, okay, prior to the sanctions, so the US actually set a sanction on Iran, saying that we are going to cap your oil production. So prior to this sanction, the country was actually producing 3.8 million barrels per day, okay? A maximum of 3.8 million barrels per day. That's like a 1.4 million in excess, okay, to what they are producing at the moment, okay? Now, suppose, few days down the road, there's progress being made and, they say that, what, we are going to lift the US said that you're going to lift the sanction of Iran. You can be very sure, okay, we can be very sure that Iran is definitely going to open their oil taps and start producing oil like mad, okay? This is, their main revenue for the country, okay? So this is what they're going to do. They're going to max out their oil production, once the US give the green light, okay? So lifting the sanction will lead to an overall higher oil supply, okay? Because Iran is one of the members of the OPEC as well, okay? So, I mean, if let's say the OPEC Plus were to actually, set a quota for the next few months, okay, beyond August, then what if, all of a sudden, the US and Iran actually, come into peace and revive the nuclear deal, and hence lifting the Iran sanctions, okay? This is going to cause a bit of a, I would say, disruption to the OPEC Plus arrangements of, what's the production quota is going to be like in the next few months, okay? Why is that the case? Imagine this, okay? The OPEC Plus members have agreed that, individual members are going to produce, say, for example, 500 million barrels of oil per day. Now, with the lifting of the Iran sanction, with the lifting of the Iran sanction, Iran is now producing more oil, okay, than ever. Okay, this will actually, in a way, impact the individual members' production quota. It may actually cut down, okay, lower the quota that those members are allowed to produce. This, I mean, for sure, this is going to lead to, some of the members being upset, especially Russia. Okay, as we know that, Russia and Saudi Arabia has always been like the two main players, and they are always in this tension of like, why are you not letting me produce more oil, the kind of things. So, it becomes an issue. It will eventually becomes an issue. So this is the second reason why the OPEC Plus will just want to, stick with the quota, okay, for August and see how it goes. We take things slow, and, month on month, we'll just evaluate until, the Iran sanction has been lifted, and then we can have a clearer view of our long-term production quota, okay? So unlikely the OPEC Plus is going to set a quota beyond August, okay? Now, when we talk about oil, it actually has an impact on the Canadian dollar. So for traders out there, if you are actually trading dollar CAD, CAD yen, or other Canadian related pairs, okay, just want to be careful about tomorrow, okay? There may be volatility. As to what time the meetings will be held, nobody knows that, okay? It's not actually one meeting that sums it all. It's a series of meetings that goes on, I don't know from what time to what time. And then all of a sudden, you just see that there's a breaking news from your news services provider saying that, they have decided to stick with or maybe increase oil production and things like that. That is when you will see a movement in the price of oil, okay? And also see a movement in the Canadian dollar, okay? So if you're trading the Canadian dollar, just be careful, keep a trade short term. For now, I'm not sure if it's, I highly doubt that there's going to be any movements in the Canadian dollar for now, okay? Especially there's no upcoming news that is Canadian related, okay? I mean, I know that this Friday there's a non-farm payroll, US non-farm payroll, but the Canadian employment data will be released only next Friday. So, the main, I would say, limelight for the Canadian dollar would be this week, okay, would be the OPEC Plus, okay? Now, so, okay, it will be taking, the meetings will be held tomorrow. So any updates I will provide you guys, keep you guys update on probably Friday, okay? Probably Friday. That's when after all the meetings will be ended and things like that, okay? Just join back the call and I'll keep you guys updated of any other fundamental news and things like that, okay? With that, I'll hand it back to Junwei.
Thank you, Kim Hong. I was going to ask you what should traders look out for, but you have already answered the question. So if you are in the Canadian dollar or decide to trade the Canadian dollar tomorrow, just take caution. All right, so now let's head over to the charts with the dollar index, and we have Scott Andrews here from Forex Briefcase Australia to share the dollar index chart. Scott.
All right, thank you, and thanks Kim Hong as well for your in-depth analysis for the upcoming OPEC meeting. So US dollar, a little more eventful than I had anticipated. It's been, floating around close to 92, and it did actually break over 92 last night as well. We did have a beat on consumer confidence as well, but it was somewhat of a minor fake out as well. We obviously did see, and what I've been seeing is that in the run up to the US session opening, we've been seeing the US dollar strengthen a little bit, and then it gets a little bit of a reality check once US equity markets open, and then it sort of pulls back, and that's what we saw there. So really the main event is NFP on Friday night, but as what I see is buying pressure at this resistance level. I've got it at 92.06. It's more of a zone really, but as we have more and more buy pressure building up, and with NFP, it's been very close to expectations, and as things open up more in the US, more than likely what we will see is probably some positive news out from that, and that should help the US dollar move higher as well. But it's always good to have some what if scenarios in place. So what I have noticed is that I'll just bring it across here as well. I've got the US 10-year Treasury yield, and we're still hovering at 1.48. So obviously when we had the big sell-off in tech back in February, it started moving up and into March, and now we'll see if it does start turning over. But it's sort of been a bit disconnected, the US dollar, to this, because we're seeing it still hold up and we are seeing the US dollar strengthen still, although it's been pretty contained as well. So I just want to quickly go over the news as well from what we saw last night. So we did have, we had the Tuesday consumer confidence. So there was a beat on that as well. And that was, good to see. But then, we've just had a lot of, it's a difficult trade to get through and hold over that 92.06. Obviously tonight we've got a little bit of news coming out with the ADP non-farm employment change. So I'm going to be paying attention to that. And if we get a beat over 600. So right now there's pressure on that level, and there's, what looks to be long bias right now, but we just need a little more information out of the markets. Very conservative approach would be just to wait until NFP comes out. So make sure you're there for the Friday call as well for our analysis and a preview on how to trade the NFP.
Yeah, thanks for that, Scott. Yeah, like Scott said, do wait for the Friday currency call for more updates on the US dollar, but do join us every day for the currency call too. Yeah, so today is Wednesday, so we are going to do the pound analysis, and we have Jindal Tai here, founder of LCMS Traders, a multi-million-dollar trader trading account with more than US $15 million on a daily basis. He's also an international speaker where he shares his views about the FX market in countries like Hong Kong, UK, US, Australia, Malaysia, Vietnam, Indonesia, and of course in Singapore. Yep, sharing his views about the FX market. All right, so Jin, I'll pass it to you now for the pound analysis.
Okay, thanks for that, Jinwei. So I'm just going to take a quick picture. Okay, so now talking about the pound dollar, but before I get into that, Kim Hong went into a lot of details about the oil production and what could happen for the CAD, and we actually meant to do that because look at what's happening on the US CAD. I'm sure we'll talk about it on Friday, but look at what's happening on the US CAD. It's bounced off quite strongly off that 1.2283 level right now at the immediate resistance of 1.24. So something's going to happen here, whether it's going to happen over the next couple of days or all the way to Friday. Make sure you pay attention to that. I think that we could see some big movements from this point. And especially if those of you had attended the talk that I did on Saturday, just a couple of days ago on Saturday, I paid particular attention to the US CAD, highlighting great upside potential for the US CAD. So a lot of things could happen here. This is on the H4 time frame. Even if you look at it on a daily time frame, we could see quite good potential towards the upside for the US CAD. But coming back to the currency in focus, again, jumping onto forextradingasia.com, looking at the economic calendar here, things to pay attention to in terms of the news. Today being Wednesday, we do have the pound GDP numbers year on year was minus 6.1%, expected to stay at minus 6.1%. Quarter on quarter was minus 1.4, expected to stay at minus 1.5%. In this case, I think that we might see the numbers stay the same, but I wouldn't rule out a slightly weaker number in terms of especially in the quarter on quarter GDP number, for reasons being that we've seen the UK being on I wouldn't say as a lockdown, but as an extended restrictions across the whole economy. So, I think activity in that sense might be, or is likely to be a lot lower. So GDP number quarter on quarter, I might even think of a minus 1.4, minus 1.3 number might be in line. So could be looking at consecutive, and here's the risk, we might be looking at consecutive negative GDP quarter on quarter, which could actually, or which does actually signify a technical recession. So something to pay attention to here for the pound dollar. What else could happen here in terms of the pound dollar? Through the day, we have the ADP non-farm numbers. We spoke about that already. Well, Canadian GDP coming out tonight, so look at that. Traders Club members will pay some attention to that on the club where we talk about that. And then on Thursday, we have some pound numbers, but this is traditionally not a big price mover, so I wouldn't be too concerned. And then the focus from that point onwards shifts away from the pound. After the pound manufacturing PMI expected to stay at 64.2, it shifts straight to the US dollar with manufacturing PMI expected to stay at 61. Manufacturing PMI expected to stay at 61. And then after that, shifting over to the non-farm payrolls. I've already repeated my view for the non-farm payrolls on Monday and Tuesday. So today I'm not going to go through that view on the non-farm payrolls again, but I think we'll go through it in more details on Friday when we look at the possible scenarios for non-farm payrolls. So what could happen for the pound dollar in this case? Here, looking at a pound dollar on the H4 time frame, the last time we spoke about it last week, I was saying that if it rejects that 1.3911 level, we could see it turn up towards 1.4. Good thing is that we didn't see a strong rejection of this support level, this support zone. Instead, they actually broke lower, sitting at that 1.3836 level at this point. If we do see a bad GDP number come around for the pound, later today, we do see the bad GDP number come around for the pound. Normally, what you'll see is a downside move for the pound dollar. We're going to see the pound weaken, right? But in this case, I think because we are expecting a pound a weaker GDP number, minus 1.5, even if it does come out at a minus 1.3 or minus 1.4, this is likely to be priced in, and also with the potential downside towards the 1.3778 level. I don't think it's a good trading opportunity with only a 40 maximum 50 pip downside move towards the next support level. What I would say at this point is, if given that news to be released today, I would sit out. I would sit out, wait for it to go past. If it does break below that 1.3778 level, then you could be looking for further downside move, and it'd be more likely that you see a further, if it breaks below that point, you can see a stronger move towards the 1.3727 level. If we do see it come down to this point, first I'll highlight that area. If we do see it come down to this point, what you're likely to see, because it is such a low point, you're likely to see a lot of volatility. A lot of volatility at that point. So wait for it to break past this point before you look for any trades. At this level, you can see that last week is bounced significantly upwards. If I go to the daily time frame, you can see that even at a 1.3727 level is a multi-period low. The last time we got here was in April and in March this year, and it hasn't really got to that point since. So I'm looking to see what could happen at these two levels before looking for trading opportunities. So best advice at this point would be to hands off on the pound dollar, anticipating a drop, but not a good trading opportunity. On the other hand, if we do anticipate a drop on the pound dollar, the converse or the inverse relationship with the euro pound could make it quite interesting. The pound dollar dropping could give you opportunities to buy the euro pound back up towards the 8651 level. You can see that over the past couple of candles, it's been quite indecisive. It's been sitting at this point. I think that we could actually see it come down, test 8580 before bouncing back up towards the 8651 level. So what you should be looking for here is if it closes above, it comes down and bounces back up and closes above 8590, you have a 20 pip stop loss. For a very good 50 pip take profit level, you're looking at a 1:2 risk reward ratio, or greater than a 1:2 risk reward ratio towards the upside, towards that 8651 level, right? So things to note is that you don't always have to jump into a trade based on that one news to be released. You can always look at other currency pairs, other correlated pairs before, instead of the main pair, you could be looking at correlated pairs to look into trading opportunities from that point. So with that said, I'll pass it back to Jinwei.
Thanks a lot, Jin. All right, so just a reminder again, any information shared during this session is not intended to be a trade recommendation, solely the opinion and views of the speakers. So please remember to do your own analysis prior to entering any trades. All right, so as you can see here, trading requires so much preparation, from Kim Hong sharing so much detailed analysis on fundamentals, to Scott looking at the dollar index, and Jin here providing the technical analysis, fundamentals, and trade preparation. It may be just a short 30 minutes here, but all this comes with years and years of understanding the currency market and economics. So sometimes if you feel like trading is tough, all this preparation is not for you. Even if you're trading well, you may want to diversify your trades, trade profits you're trading. So here I'm going to get Jonathan up. Jonathan from Forex Briefcase to share what the Forex Briefcase Managed Account is all about. We're currently at 13.36% ROI in 2021 alone, and you can learn how you can diversify your investments and leave the trading to the professionals. Jonathan.
Okay, thank you, Jinwei, for the introduction and the speakers who have made a good sharing this morning. Okay, even though today was supposed to be currency in focus for the pound, I think we have also got good value in terms of the sharing with the dollar index and a very comprehensive oil updates. Okay, because as much as we look at the FX market, oil also plays a big part indirectly to related currency pairs, and I think that such information on how this correlation takes place you don't really get this information online. Okay, so I'm here to share with you about Forex Briefcase. I'm sure all of you are here to benefit and make some money from the Forex market. So whether or not you're doing it on your own or you get someone else to do it for you, I believe that's what we are here for. Okay, so Forex Briefcase is a managed account service that has a global presence over 12 countries, and currently we have over 800 clients worldwide. And how have we been doing so far? Okay, we have our 34 months track record. Okay, we are at 95.81%. Okay, we are on track to hit 100% returns over 3 years. And what that means is, on the average monthly number, we are looking at 3% per month. Okay, and how bad have we done? Okay, our maximum drawdown is at negative 2.24%. As you realize, this is a very controlled and low risk drawdown. Okay, over this period of time, and being 2.24 being a small percentage, how many months have we been profitable? So out of these 34 months, we have actually been profitable 30 months out of 34. Okay, so looking at the downside, we have a biggest loss of 2.24, which is actually not that big in the scheme of things, and only 4 losing months, which is very low risk on that side. Bringing you to the next chart. Okay, this graph you see here, I believe, is what every FX trader strives to achieve. Okay, which is actually the consistency month on month, and a good gain and a gentle, consistent return over a period of time. Okay, so as you can see from this graph here, okay, we have achieved that gentle slope of accumulation. And if I bring your attention down to the numbers below, that is where you can see our performance on a month-on-month basis. You can see that we have only had some small losses and very consistent gains. Okay, and if you're thinking about the frequency of trading to achieve such a result, okay, we do not answer high frequency scalping trades like you expect many trades in a day. That also brings down to an average of about 2 to 3 trades daily. So and these trades are not held over a long period of time, okay, to reduce our risk exposure to the markets. So this in most of it are intraday, some longest 2 to 3 days. Okay, so in that way, we manage to keep the risk low at the same time, bringing you a very, very decent returns comparing to other market products. Okay, so like Junwei mentioned, this year, okay, from January to May, we have already achieved 13.63%. Okay, and again, we have hit our 30th month out of 34 months in profit. So I believe in the first half of this year, what has been trending lately is also the cryptocurrency area. And what you can see is that, yes, definitely there were chances to be making quite a good return on that, but at the moment, it is still highly speculative. I think we will share more of that on Friday. Okay, but as you can see, the pattern with crypto over the years is that it can get very hot for a period of time and it cool off very quickly. And if you do not know how to time yourself well, actually, in all honesty, no one really knows. You could get burns. Okay, but if you have stayed with us for this period of time, you would already almost make 100%. And this year alone, despite all the hype, you would have made 13.6% without even having to be involved or even being a tad concerned on how the money is doing. So if you are interested, look forward to see you on board. Okay, the links will be shared in the chat below, and look forward to getting in touch with you. Thank you, guys.
Okay, thank you, Jonathan. Yeah, I pasted the links in the chat. So if you are interested to get your account set up, click on the link and put in your information. The guys from Forex Briefcase will contact you. Okay, so thank you for your time today. We have come to the end of the session today. We'll see you guys tomorrow for the yen and gold analysis. Thank you so much and goodbye.